In construction, there are lots of different types of insurance that a general contractor or a subcontractor will carry, and the limits of these policies will be determined one of two ways. Some are by an amount of insurance coverage that a contractor would choose, and the other is a function of what the law requires. And of the different types of policies, the first and most common would be general liability insurance, which would cover a range of things such as personal property or company-owned property or other types of accidents or damage that might occur either on a project site or in a corporate office or in some other situation that's the company's responsibility. The second type of major insurance that a contractor would carry is workman's compensation, which is required by law. A lot of times you'll hear that as abbreviated as workman's comp. This is a type of coverage for employees that's related to accidents or illnesses that are a function of the workplace. And so this is a little bit unique for a construction firm in that the company carries workman's comp for all of its employees company-wide, but the coverage is for incidents or accidents that happen primarily on construction sites. Another type of insurance is for automobiles or equipment, and this is fairly self-explanatory. This would cover vehicles or equipment that might be in use for company business. And then it's typical on most projects for there to be a builder's risk policy, which covers the actual project components during construction for things like fire, theft, vandalism, and so forth. Sometimes this policy is carried by the general contractor and sometimes by the owner. But either way, the builder's risk policy is written in favor of whomever would be responsible for replacing construction in the event of one of these events. It's also not uncommon for a contractor to carry an umbrella policy. There are limits for what the insurer would pay for each one of these policies, and an umbrella policy is a second layer of risk mitigation, so that if the maximum limits on any one of these coverages is met, then the umbrella policy can kick in and actually, in effect, raise the limits of a particular type of coverage based on the event. Notice the way I've got these distributed. The general liability, workman's comp, and some of the automobiles, these would typically be policies that deal with the company at large. That is, without respect to a construction project. Specialized equipment and the builder's risk policy, on the other hand, those policies are written specifically for a particular project. And again, each one of these policies would have limits, and those limits are set either by some amount that the company chooses or what's required by law. Based on those limits, the insurance underwriter would determine what the premium is to be charged to the contractor to be afforded that coverage. And one thing that determines the premium is what sort of deductible that the contractor would choose to have. Obviously, as the deductible goes up, then the premium comes down because there's a transfer of risk, and vice versa, the premiums would go up as the deductible was lowered. Some contractors choose a strategy in which they would like to be self-insured, and as you can imagine, this is a fairly risky proposition. But what it means is that the contractor is willing to take the risk of a certain amount of insuring itself in exchange for not having to pay premiums. Now, typically, what really happens is that even though a contractor chooses to be self-insured, that does not mean that they don't carry any policies at all, but rather they still carry an umbrella policy so that if there is some incident or accident that is significant, that they are still afforded some coverage at a high level. Or another way to self-insure would be to still carry these policies, but on the other hand, to make the deductibles extremely high. So technically, instead of carrying all of the insurance themselves, then really the contractor's deductible would be such that the premiums would be comparatively very low. So let's take a look at a certificate of insurance and see what that might look like. As you can see, this document is a certificate, and in this case for a subcontractor. This document is not an insurance policy, but rather is proof that the policies exist. Let's take a closer look. Here we see the producer, in this case the insurance agent. And this insurance agent is representing what looks like two different underwriters of insurance, Pennsylvania National and a self-insured workman's comp fund within the state of Alabama. And so how the certificate works is that for general liability insurance, this shows that the subcontractor is carrying general liability on a commercial scale. Here's the policy number, here are the dates that the policy is in effect, and here are the limits. And again, those limits are established as either those that the contractor chooses or whatever the law requires, whichever is greater. This letter here suggests that provider A, Pennsylvania National, is affording coverage for general liability. On the automobile, this shows the types of vehicles that are covered, and again, policy numbers, dates, and so forth. It looks like they're carrying $1 million worth of coverage for automobiles. Again, this policy is underwritten by Pennsylvania National Insurance. Similarly, on the umbrella policy by Pennsylvania National, we see policy number, dates, and they're carrying a $5 million umbrella. Notice that the limits on insurance are split up into occurrences and aggregate. And the same thing here for occurrences on general liability and then a general aggregate. So they have coverage for $1 million per occurrence and $2 million in aggregate. Let's highlight those just so that we can see them. And what that means is that the insurance company is willing to pay up to $1 million per occurrence or incident, but only $2 million in total aggregate over the course of the policy, which in this case is on an annual basis. For workman's comp, you can see that this is actually underwritten by the second insurer. It would not be unusual for companies to have multiple carriers. For workman's comp, here's the policy, dates in effect, and the information on each accident and so forth related to the policy. They have one other policy here on leased and rented equipment with a small limit of $50,000. Description of operations here, and not uncommon, would be a requirement for the subcontractor in this case to list the general contractor as an additional insured. Basically, that's a way for the general contractor to have himself listed as an insured for items related to any negligence by the subcontractor. The certificate holder in this case is the general contractor, and then it's been executed here by the insurance agent. This same type of form could be used for general contractors. So instead of a subcontractor, then the general contractor would be here, and then whomever their providers of coverage are. And then at the bottom, the certificate holder, instead of the general contractor, would be the project owner.